should be live on multiple. I should be live on multiple platforms. And we are going to give this a good breakdown. All right. What's going on, ladies and gentlemen, and beautiful people? Let me begin my recording process first. All right. There. Now we are recording. What's going on, ladies and gentlemen, and beautiful people? It's me, it's your boy, Ness Velasquez, and happy Monday. Happy Monday. Thank God it's Monday. Thank goodness it's Monday. I hope everyone is having an amazing Monday so far. Hope you had a great Mother's Day weekend. I spent the majority of this weekend in the hospital, but I at least was able to get discharged yesterday, so I could spend Mother's Day with my fiance and my loved ones here in the area. So, reason why I was in the hospital was because I wasn't really feeling good. My fatigue was down. I could barely walk. I felt everything on me was so heavy. I had a massive pounding headache. So I wanted to make sure I was good. So went to the hospital. They checked my levels and all that. They wanted to admit me to study me further. And yeah, that's basically what happened, just long story short. So, I was able to spend Mother's Day with my fiance and my loved ones. I hope you had an amazing Mother's Day weekend and having a great morning so far, great afternoon so far, depending where you are located around the world. And if you're in Europe and Africa and on the eastern hemisphere of this earth, then I hope you're having a great afternoon or a great evening so far. So what I'm going to be doing right now is I'm going to be going over indicators. All right, we're going to cover the basic indicators first, and then on the lessons that we'll do tomorrow, and maybe we'll stretch it to Wednesday so we could cover a multitude of indicators. We'll cover the basic indicators today. We'll do some more advanced ones tomorrow, and then on Wednesday we'll probably cover some, additional indicators, or we'll move on to the next lesson. So today we're covering just the basics, and talking about basics, right? When it comes to indicator, one of the most common, if not the most common indicator, is the moving average. Okay. Now, there are different types of moving averages. So here's the quick breakdown of it. You have the simple moving average. You have the exponential moving average. You have the smooth moving average, the weighted moving average, the triple exponential moving average. And then we're going to cover, how to apply it to your actual trading. So let's first start off with the simple moving average, okay? So we're going to do a little bit of chart time, and then, we're going to go over the text, okay? So the calculation, the SMA, short for simple moving average, is calculated by adding up the prices of the stock or asset over a specific number of time periods and then dividing this total by the number of time periods. This gives equal weighting to each price point within the period, okay? Characteristics. The SMA provides a smooth indication of the trend over a given period. It is less responsive to price changes and trends more slowly because it considers all data points equally within the period, okay? So let's take a look at how a regular simple moving average looks like, okay? Right now we are on, this is the Bitcoin chart. Okay, let's bring this in a little bit more. All right, and let us insert the simple moving average. So you go to moving average. And you'll see it right over here. Okay, moving average, convergence, divergence, we'll go over that. That's called the MACD. Moving average exponential, we'll cover that right after we cover the simple one. Moving average simple, okay? So this is the most common one, the simple moving average, okay? Here's the simple moving average. Now, over the course of the 1 hour, you see that the moving average, it follows price, okay? And if you adjust it, okay, you go into inputs, basically it's taking the average of the last 9 candles. So the length is set to 9, all right? And it's based on the source, is based on the close. All right, now when we move this up a little bit, let's say we go over to a 50 MA, all right, then you can see this smooth out just a little bit more. So it's not going with every single impulse of the price. This is how a simple moving average looks, okay? Okay, so again, provides a smooth indication of the trend over a given period. It is less responsive to price changes and trends more slowly because it considers all data points equally within the period. So as you can see, on a higher time frame, it's a little bit more smoother, and it's not really tightening in on every single price movement. It considers multiple data points. We can have a whole masterclass on moving averages. We can have a masterclass on every indicator, on every drawing tool, but we're only going to cover the basics because at the end of the day, you want to learn how to use it, right? Okay. Next up, we got the exponential moving average. We space this out so it's a little easier to read. Okay. Exponential moving average. Okay, the calculation. The EMA gives more weight to the recent prices, which makes it more responsive to new information. This is why the exponential moving average is my go-to. When I'm using moving averages, I prefer exponential moving averages because it is more capable of adjusting to new prices. Okay. Now it's calculated using a complex formula that incorporates the smooth moving average. The simple moving average and the previous period's exponential moving average with a weighting multiplier that emphasizes recent prices. So think of exponentially, right? So let's switch this from a 50 MA, okay, over to a 50 EMA, and you're gonna see. So let's go over here on indicators one more time. All right, let me go to the regular library. I'm gonna have to just scroll down. Here we go. All right, now here's the EMA right over here. We're gonna go to the settings. We're gonna choose 50 on it. Let's give it a different color so you know which one is the exponential and which one is the simple moving average. Let's give it that orange color. All right, and you see that there's a slight difference, okay? Not too much of a difference, but there is a slight difference. However, look what happens when we get into more periods, right? So right now we're at 50 periods, okay, which means it's based on the closing of the last 50 candles. Let us now move this over to a 200 moving average. All right. Okay. So you see there's a little bit more of a difference there. Now, the more spaced out it is, okay, the more difference it does make. Right? But sometimes these slight differences, it really does do something here, okay? Now, moving averages could be used as trend lines, okay? When you have an MA cross, which is probably the most common strategy, all right, which is going to be the next series of things we're going to cover after we get through indicators. We will then talk about strategies, which most strategies is a collection of multiple indicators together and how they work, right? You're going to see more of a difference later on down the line. Still, my go-to is exponential because it is more adaptable to recent prices, okay? All right, now let us go... let us go over to the other types of moving averages. All right, as you can see here, as far as exponential moving average is concerned, it has a faster reaction to price changes than the simple moving average, which can be beneficial in fast-moving markets, especially when it comes to binary. It reduces the lag inherent in simple moving averages by emphasizing recent movements. Now, we are looking at Bitcoin here in this chart. If we switched it up and let's say we go to another chart, let us look at CAD JPY. I don't know, it just randomly came up to my mind. CAD JPY. Nice cross forex pair. Okay. You can see some differences. For the most part, all right, these can be used effectively in combination with other indicators as well. Okay. All right. Now, let us talk about comparing to the other moving averages. All right, the weighted moving average, similar to the EMA, the weighted moving average also places more weight on recent data. However, the weighting is linear and can be customized, whereas the EMA, the exponential moving average, uses an exponential function for weighting. Smooth moving averages, the SMMA, this average is similar to the EMA in that it aims to reduce the effect of outliers by smoothing out price data. It does so over a longer period than the EMA, which can make it less responsive to rapid price changes. The triple exponential moving average, the TEMA, takes the concept of EMA further by tripling smoothing the price data, which helps filter out noise even more effectively, but can lead to a greater lag. All right, pros and cons for everything. Right, so let us open up some more of these indicators. All right, let's go right into where the moving averages are. Okay, let's go with weighted. Let's give it the same period. All right. Okay. So as you can see, all right, when you're looking at all these moving averages together, for someone that's probably seen this for the first time, you're probably thinking to yourself, okay, well, that's not much of a difference. It really does become a major difference, depending on the different scenarios that you're in, the different trading assets that you're looking at. So, for example, when the market is trending, right? For example, let's do this right here, okay? When the trend starts to bend, for example, which is the first one that it crosses down on? It crosses down on the weighted one, right? The gray one was the weighted one. That was the first one. So when it came to detecting a trend reversal, the weighted moving average wins. The blue one here, okay, this is the simple moving average, okay, all right, did its thing over here. The EMA, which we color gold, is more adjusting to recent prices, but as you can see, every indicator, has its moments. Then over here, this is the last one over here. Look at this, the smooth moving average. This is extremely laggy, and that's what it's supposed to do, really. It's supposed to be the most relaxed type of moving average. All right, that's the smooth moving average, the SMMA, right? Not the simple moving average. Simple moving average is the standard moving average, basically. Weighted moving average, as you can see, right over here, EMA, SMA, okay? So it really does do a difference depending on what scenario you are in. The EMA does function better as a better trend line, right? It's more of a confirmation because the thing is, the weighted one is so close to it that, yeah, it'll detect a cross, but look how this came back down, right? Whereas the exponential, it's like it's tight enough to where it's gonna do its job with the confirmation. So you're going to use these different moving averages for different types of scenarios, for sure. Okay, application and trading. All right, SMA. Due to its simplicity and smooth output, it is often used for identifying long-term trends and support and resistance levels in less volatile markets, okay? So understand the application of these different types of moving averages. EMA, preferred in short-term trading. This is why I use it a lot for binary options. I use it a lot for forex scalping. EMA, preferred in short-term trading and for following trends in more volatile markets because it reacts faster to recent price changes. The weighted moving average and the smoothed moving average. These might be chosen based on specific trading strategies that require customized emphasis on certain time periods. And the TEMA, which we haven't gone over yet, but is useful for technical traders who need to track fast-moving markets, though it may produce too many false signals in highly volatile conditions. Let's check that out. Okay, let's take this out, and this out. And let's go for the triple EMA. Should be on here. Let's give it the same 200 period. All right. Super tight. It is extremely tight, as you can see. Yeah, it's a little too tight. So again, it depends on what strategy are you trying to use. But if you really want a super tight moving average, the TEMA would be the one. I'm a fan of exponential moving averages. TEMA would be great for binary, depending what time frames you are looking to trade. But you can use these in multiple time frames, whether it's 30-minute, 4 hours, weekly charts. You're going to see, differences on the different types of moving averages based on how you're using them. Okay. There are other ones that I want to add in here. Okay, so we covered all of them for the most part. We covered the SMA, the EMA, WMA, the SMMA, the TEMA, right? But then you have the moving average ribbon. All right, now you ready for me to reveal something for those that's been following me for years? The moving average ribbon has been my secret weapon behind the web slinger strategy that I've created in 2018. And you don't believe me, that's fine, because we live in a weird place now where the creator could create something and then, you share it with the company. Customers love it. These companies create a product out of it. And now they want to rewrite history and all that good stuff. Well, let me show you proof, okay? Let me show you proof. All right, I've put together a lot of strategies over the years. Okay, and here we go. We have and here's the thing, man. Here's the thing. A lot of revenue was made. Hundreds of millions of dollars in revenue was made for this company. And in the product that I co-created with the company, and I had to include certain individuals who's running it now, what's interesting is that in the plans, I had already other strategies ready, right, to be revealed, because I thought, like Apple, you always want to give updates, right? And so I already had strategies on top of strategies on top of strategies. And they were all working strategies, especially in the times. A lot of times what the markets do, the market changes its rhythm. every now and then, right? But at the time, this was fire. So let's take a look at the web slinger. All right. And what you're going to see over here with the web slinger, all right, was that the web slinger was really a moving average ribbon. Web slinger is a moving average ribbon that goes from 5 exponentially to 95. Hence why all these lines appear. These are all moving averages together in a moving average ribbon. And it changes the color if the market is going bullish to blue. All right. It changes to red when the market is going bearish. Right. And so this is it. Here's the proof. Okay. I don't cap in my rap. So I'm going to add moving average ribbon here. Let me kind of get this out the way. And let me put it on this side for a second. Okay. Let's get this out of the way and we'll get into custom indicators a little later too. But look, let's go to moving average ribbon. This is really the basic. This is the basic one over here. But, you know, the way how I had my moving average customized was I had a lot more lines on it. But here's the gist of it, right? So let me actually go into the settings over here. All right. And we'll change this all to EMA, first of all. Okay. Right? It could be blue. But when it came to the customization of it, it's a little different. But basically, if the market is bullish, it would be blue. If the market is bearish, it would be red. But doesn't this look familiar? Doesn't this somewhat look familiar? Here's the stripped down version of it, right? The real version of it is this 3.0. Yeah, guys, I'm like way advanced in this, but let me bring this to 3.0. You see how different that looks? All right. Sheesh. See if I have the OG one still. I should. I have a bunch of them. I really went crazy perfecting a lot of this. Man, this was gonna be the next release on TBX. If only they believed in me. It's crazy, but anyways, as you can see, I've partnered with people behind the scenes that are not, a part of any of these kinds of companies. I tell them what I want, what I'm looking for. I back test them, all that good stuff. So you see that there's quite a few indicators with my name on it. Okay, Doji Sticks by Ness, Tripwire by Ness, Web Strings by Ness, right? All that good stuff. So let me take everything out of the way. Right, and here we go. Here's the Web Strings right here. Basically, that's a moving average ribbon. All right, that is a moving average ribbon right there. And so, as you can see, it's fire. It's a strategy that a lot of people, if they use the moving average ribbon the way that I've used it, it could really bless them, completely. Because as you can see right over here, it'll detect the beginning of a trend before it even happens. And then there's points where you could buy, right? And then in a downtrend, it'll detect it, right? And then it'll show you points where you could sell in the middle of that downtrend, right? But for the most part, moving average ribbons is slept on, but yet it is extremely powerful. Extremely powerful, right? So look, we covered just about any kind of moving average you could think of. Of course, there are way more advanced ones out there that are customs, that are custom ones, which means developers, they create it based on a trader's request, or there are some trading programmers out there. All they do is create new drawing tools and new trading indicators. But for the most part, that about covers it for moving averages. Now let's cover some of the other indicators that are commonly used. All right. And since we're kind of already on the moving average theme, let's go with MACD. Okay, let's go with the moving average, divergence, convergence, okay? Let's remove indicators from here. And let us go into indicators. Go to MACD. Boom. The moving average, convergence, divergence. All right. Now, what is this actually supposed to do, right? Well, what it's supposed to do, for the most part, it's a working strategy in itself, all right? A little bit of a crossover strategy. It's a moving average crossover strategy. But at the same time, it also detects when there is divergence in the market. And so what that means is if price is showing you one thing, but the indicator is showing the exact opposite, that divergence is an indication that the trend is about to bend. Remember the saying, the trend is your friend until it bends. Okay? Let me close out this window. Okay? And let's deep dive into it. We could deep dive into it. I don't mind deep diving into MACD because this alone could be a strategy, right? We could do that. I'm down to do that. I could give you the basic gist of it. Let me add a simple moving average to the top real quick. Okay, and usually 9 is the standard, but we're gonna change this 9 into a 12, just so it mirrors the moving average that we see here on the MACD. So you have 12, all right, and you also have another moving average of 26. So we can match that right over here as well. Let's go back to indicators. We're going to give this a period of 26, which means it's going to be based on the last 26 candles. All right. And this is default settings on the MACD. All right. So basically what I'm doing is I'm reflecting these moving averages on the top main indicator window as well, just so we're all on the same page here. Okay. See, this one is the okay, and the orange one is the 26. All right, so let's mirror it. It's kind of like a hot orange. All right, and so let's point out what we can see over here. All right, so one is going to function as this. Basically, when there's a cross, when there's a moving average cross that happens, that is an indication. Now, that's an indication for a buy and a sell for the most part. This, essentially, we're already talking about a strategy, but we'll get into more strategies later. So, for example, when you see the blue line right here, which is the fast moving average, cross up the 26 moving average, that is a signal for a buy. When we see the the fast moving average crossing down the 26 moving average, that is a signal for a sell, right? So there you go. You have a signal for a buy. You have a signal for a sell, just up here, right? Now, when the market is trending in the indicator, all right, the MACD is showing that it's not following through, then that's an indication that the market is going to start to bend. Let's go and let's change it to a 30-minute chart. I'm going to have to stretch this out. Okay. And let's see if we can pick up some divergence here, okay? So as you can see, this is basically all right, as you can see over here, if you're following along, you're going to notice that it's pretty much moving very similarly. All right, but there are these moments where there's going to be a difference. And that difference is the divergence. Let's give you a more detailed look. Let's break it down. All right. 12 and 26. It's that hot orange color, right? All right. All right. When the two moving averages cross, there is a corresponding crossover of the zero level on the MACD as well. All right. So you can kind of see how this is matching, right? For the most part. All right. Crossover happens, signal for a buy, right? If there's a bearish crossover that happens, that's a signal for a sell. Okay, long story short. All right, now when you can actually start to see a divergence, we can use a vertical line. All right. When it starts to move away from each other, right? So here's a cross down here, not really a cross up here at all. It's 1226. All right. It's a little bit of a massive difference there. Okay, so when the MACD, all right, isn't truly reflecting the price action movement on the top, then that's divergence, and that's how you know the trend is bending, or the market is not is losing its steam if the market is trending, or if it has any kind of momentum going on, right? For the most part. So we can see that as the two moving averages move away from each other, the MACD line also falls or rises, okay? And that's what divergence is. See if I have another example that I've already done that I could show you. Okay, that's as simple as it's gonna get. All right, so can you see a difference with how the MACD is reflecting the price movements that we see up here? Do we see a difference? Best way you could tell is look at the crosses, right? We got a cross over here. We got a cross over here on the main indicator window. There was a cross that happened here on the MACD just a couple of periods before, which to me was pretty sharp. So it's always good to have the 1226 on the main indicator as well. Let's see if we could we notice a massive difference. Let's go into the 1 hour, go into a higher time frame, and we'll see what's good there. Okay. you see how, let's go into some shapes. It's from this point to this point. This was rising in price, but over here, you see that there's a fall right over here. That, my friends, is showing divergence. So this was still going up, still looking bullish, right? But look, this already detected that there's some volume being lost over here, which means it's a matter of time before the trend started to bend. And at this point, once you recognize the divergence, you could exit out of a buy trade, or you could just wait and enter a sell. And if you did that ahead of time, all right, you would have got in on that. Now that is, for the most part, it's risky to sell during an overall uptrend. But, there's different things that you could do with divergence. It all depends on the strategy that you like to use. There's different strategies that we could use with MACD, but for the most part, it's to pinpoint divergence. Okay, and that's just one example. We could go through a couple of other examples and whatnot, but that's the purpose of the MACD. It's cool because it'll show you the crossover strategy, and you could identify divergence on it. Okay, so it gives you a heads up before a trend is about to bend, or if there's going to be a momentum shift of some sort. All right, there you have it. All right, let me exit out of here. And all right, so far we covered different types of moving averages, including the moving average ribbon. We also covered the MACD, moving average, convergence, divergence. Now we could cover, what time is it right now? It's like almost already an hour in. Right now we could cover the RSI and the stochastic, okay? So let's do that. I'm going to remove the MACD, okay, right now. And let's remove the drawing tool over here. All right. And at this point, let's cover the RSI. All right, the RSI basically measures the speed and the change in prices. So let's do that. Let's go over here to indicators, technicals. RSI is the relative strength index. Boom, here we go. I like how they updated it throughout the years. So I don't know if you guys noticed, but TradingView has updated the RSI indicator. So now you have like this nice little gradient coloring when the market is outside of the boundaries, right? All right, you have set to 30-70. So when it's above the 70 mark, all right, it is overbought. When it is below the 30 mark, it is oversold. So the RSI, all right, basically what it is, it shows you, all right, how the market is adjusting based on speed and price. Now, if the market is above the 70 line, it is considered overbought. And so what I'm going to do, just to kind of make it quicker for me, okay, what you're going to see is that when the market is above the 70 line, it is overbought. When the market is below the 30 line, it is oversold. Okay. So as the market is in this area right over here, basically what you're looking for is for the market to make a comeback. So when the market crosses down that 70 line, all right, that is a signal for a sell. Okay. When the market is oversold and it finally makes its way up and it crosses that 30 mark, okay, that is a signal for a buy. Because the market is full of supply and demand, right? It's supply and demand at the highest level. That's really what it is. It's trade, ladies and gentlemen. Imports and exports between one country and another. This impacts GDP, gross domestic product. This is one of the biggest measuring indicators behind an economy's success. Not just for the country that's measuring themselves, but for the global scale. This is how the world measures each other and their economic power, right? It's all supply and demand for the most part. RSI, the relative strength index, once again, as you see here, measures the speed and it changes in price. So it's a little different than the stochastic, but in the stochastic oscillator, it's going to show you the same thing. It's going to show you when the market is overbought or when the market is oversold. RSI tends to be a little faster, right? But this is an excellent indicator to use, especially when you're scalping. This could be great to use even when you are, trading under trending conditions, right? But I like to use it for scalping. So on the lower time frames, right now I'm using it on the 1 hour. Okay, right now I'm using it on the 1 hour. But honestly, if I'm scalping, all right, I use it in the 5 and 15 minute too. This is great for binary, right? Okay, hopefully that makes sense to y'all. All right, so the 1 hour, 4 hour, daily, weekly, etc. Use the RSI. All right, that's great. You can use it for Forex. For binary options, though, I use it on the 5 and 15 minute, which is pretty powerful. Okay, and so hopefully, that clarifies some things for you right there. It's a very great tool to use. All right, especially in any kind of situation, really, whether the market is trending or if the market is basically consolidating. Okay, now let me minimize this. All right, I'm just going to minimize it all the way. And let us go into the stochastic oscillator. All right, let me move this up. Okay. And let me stretch it out. All right, so the stochastic is a momentum-based indicator. It is a momentum-based indicator. And it's basically to show us, very similarly to what the RSI shows us, which is if the market is being overbought or oversold. And what it is it compares to the closing price of now compared to other closing prices in the past. So this is a momentum-based indicator. All right, it's pretty powerful. You can adjust it as you want. Switch it up, switch up the colors, whatever it is that you want to do with it. But for the most part, all right, when the market is below the 20 line, so it's a little different than RSI. RSI default settings is 3070. Here is 2080. So when the market is below the 20 line, this is oversold. So when the market crosses up again, that's a signal for a buy. When the market is above 80, it is overbought. And so basically you're going to want to wait for the market to cross down the 80 line for you to consider that as a signal for a sell. And so these two indicators are used together a lot. That is the RSI and the stochastic. Okay? And a lot of times when you could align it the same, right, for signals for buys and sells, that's multiple confirmations. So we'll go more into that when it comes to us talking about strategies, which is basically utilizing multiple indicators together, all right, to get multiple confirmations that the market is going to go a certain direction. That is when, we're going to see a little bit more of this. But one of the great combinations to use, if you are going to use stochastic and RSI together, they created an indicator that's just stochastic RSI. But if you're going to use this together and you want to capture some really good tight trades, then the indicator I recommend you to use, especially when it comes to scalping, is the Bollinger Bands. And so this is going to be the last basic indicator I'm going to cover in this lesson. So that way we can space it out, smoothly, right? But the Bollinger Bands, okay, is definitely one of my go-tos, especially when I was beginning my journey as a trader. Okay, the Bollinger Bands was created by John Bollinger. All right, and basically, what we see over here is a 20 moving average. So if we click on it, we can see. Let's look at the inputs. All right, this is a 20 simple moving average. Okay, that's what it is. And the line at the top and the line at the bottom, it serves as barriers in a way. All right, but really they're basically moving averages that's based on a 2-period standard deviation. Standard deviations, are mostly used in statistics. So it basically is there to mark the potential margin of error, right? And so what we find is a few very interesting things when it comes to Bollinger Bands. Number one of the most interesting things is that 90% of the time, the market is in between the top and the bottom Bollinger Band. So we could use several different of these examples. So we're looking over here, okay? All right, check this out. Usually the market is between the top and the bottom band 90% of the time. Whenever the market is outside of the Bollinger Bands, all right, that means that there's a strong indication for a potential reversal. So these would be your signals for a buy and your signals for a sell, right? So whether it's wicking it or there's a candle body cross, all right, you're going to notice that these are strong signals for buys and sells. even when the market is trending up, for example. So right over here, we can see a clear uptrend. What you would notice is that the middle band serves as a support point during trending conditions, which you could buy at the middle band on the way up. Okay. And right here, the top band during the uptrend could act as a take profit spot. Okay, right over here. It could serve as a take profit. And notice that during an uptrend, the market is mostly on the top half of the bands. Okay. During a downtrend, you're going to notice that the market is mostly on the lower half of the bands, where the middle band serves as a resistance throughout a downtrend. And the lower band over here will serve as a take profit. During consolidation conditions, okay, you can see clear buy and clear sell for the most part. All right. So when the market is consolidating, which means the market is just basically moving sideways between support and resistance, all right, you're going to get your buy and your sell points in, right? When the market is uptrending, all right, those are going to be the spots to buy in at. When the market is downtrending, these are going to be the spots to sell at. Okay. So uptrend, you want to buy at the low band or at least at the middle band. When the market is downtrending, you want to sell at the high point or at least the middle band. Okay. Serves as a good point. So 90% of the time, once again, excuse my chicken scratch. All right, 90% of the time, the market is between the top and the bottom Bollinger Bands. So whenever you see the market is outside of it, strong potential reversal right there. All right, so just keep that in mind. It is a very powerful tool to use. Now, let me clear this up for you. When you use it in combination with these other indicators such as stochastic and RSI, now you can identify some really powerful trading opportunities. You just get more than 3 confirmations because we're only using 3 indicators here. That is solid enough for you to want to take a position. Okay? That will be solid enough for you to at least want to take a position. Look at this right here. Look how powerful this is. Let's use a vertical line. All right, top band. All right, that's a good sell right here. Okay, look, here's the outside. Bollinger Band, price is outside of the Bollinger Band right over here. Look what happens next. Hard sell right here, right at the red band. Right, look, stochastic cross down right over here on the 80. That's a confirmation for a sell. Another confirmation for a sell right over here. It is in the overbought zone, right? And it's starting to sharply come down. Finally crosses down right over here. You see it. You see where the line crosses down. And so right there, that would have been a great catch. Now we are on the 1 hour. So in the 1 hour, this is good for Forex. 1 hour, you would have caught a solid, let's say we used a green band as a take profit point. That would have been 264 pips. Okay, 264 pips right there. Yeah. That would have been solid, real solid. And there's opportunities for buys as well. So my breakout strategy was the simple scalper strategy. Okay. And it included this. It included the Bollinger Bands. It included the Stochastic. It included the RSI. And it includes some other indicators in it. But these were the three main ones. Right? These were the three main ones. And I literally did my thing as a trader and also as a teacher, just using, simple strategies that other people could learn that was simple yet super effective. Okay. Hence the simple scalper was born. Right. And so, when you can learn how to use multiple indicators and combine it all into one, then you could become a strategy developer. All right. Now, in the next lessons, we are going to go over some more indicators. We're going to go over money flow index. We're going to go over zigzags. We're going to go over much more stuff. Okay. We're going to go over some more advanced stuff. All right. In the next lesson. So let's take a look at indicators right here. Let's go to technicals. We have the Keltner channels. We have the Williams-Gator indicators. We have Super Trend. We have a few others, y'all. And so we'll make sure we'll take our time explaining these indicators. So we only went through a few, very simple, but after today, you should be able to practice and use them. Use some of these indicators in combination with one another. There was sometimes I threw a MACD on top of my simple scalper strategy, and it worked like a charm, right? So let's say we go over here, MACD. Right? It could all work. It could really all work together. All right. So once you learn how to play with some of these indicators, adjust the settings too. That's another thing I'm going to tell you. Don't be afraid with adjusting the settings. Sometimes these default settings ain't it. Sometimes, when you play around with the settings and you figure like, hey, you know what? I happen to get a much better accuracy with my analysis when I mess with the settings to this point, right? Start playing with the settings with each indicator, okay? And use indicators in combination with one another and watch some magic happen, okay? So I hope this lesson was, easy and valuable enough to, easy enough for you to understand and valuable enough for you to want more, right? There's a lot of stuff that you can learn as a trader. I'm going to get done with a lot of this education stuff because I want to get right back to just getting to the bag. But I'm going to do my part, and I'm going to be adding a lot of these lessons over to the guides on the Facebook group. Okay, so when we go over here to the Facebook group, go over here to the Facebook group and we go over here to the guides, right? You're going to see all the lessons over here. Okay, guide 4, guide 5, all that good stuff. All right, you're going to see all the lessons on guides, and I'm also going to have a playlist on the website. So again, if you're unfamiliar with the website, it's mindonbillions.pro. When you come over here to mindonbillions.pro, go on over to Binary FX, hover your mouse on it. Okay. You go to the Binary FX station. All right. It's basically going to be a directory to help you go where you need to go. Here's some free broker and platform registrations. Click on Sway Markets. Okay. Click on the Sway Prop Firm, Do Trade, CoinZoom. It's free registration. Register for free. and then you can fund later when you're ready to actually trade. And here's a couple of playlists that you can utilize as well. All right, and a couple of tools that we think you're gonna find pretty interesting. To get access to our special signals, then just click on Telegram. All right, it's gonna bring you to the bot. So if you send the bot a message, okay, you click on plans. All right, and it'll show you a monthly plan is $50 a month, and the yearly plan is $500 for the year. All right, so we could do the heavy lifting. We could do all the analysis for you and give you the heads up. All right, which reminds me, in a couple of minutes, I got to send a few signals, because this is, to me, this is when the market is pretty hot. And, and I analyze on multiple levels. I analyze in multiple ways. Okay. One of the signals that I called already, this is already, a little older, is the USD MXN signal. All right, which scored, let's take a look at it, 503 pips. Okay, 503 pips. All right, we have others that are active right now. USD CAD, okay, currently in the profit zone right now. All right, which you can pull out a profit right now. We have some others that are, working itself out. And I got some new signals to put out already, okay? We have a lot of systems and tools that are there to ensure your success. So again, go to mineonbillions.pro and register for all the platform registrations, okay? And make sure you get access to our signals, all right? And you'll be good to go, okay? And with that said, ladies and gentlemen, stay blessed, take care. I'll see you on tomorrow's lesson. If you got any questions, hit me up, let me know. Peace out.